Currently, we're seeing a rental crisis. We're seeing vacancy rates slump. We've got clients at the moment that are currently renting and have their rent go up by $100 a week, which is causing a huge issue on top of expensive letters, fuel going up, all these things happening. So today we're going to break down where it might be cheaper to buy a property rather than rent. So let's dive in. Jaden, starting off at the top, what's actually happening out there?
Yeah, so as you might have read, the rental crisis in Australia has gotten worse. So there's obviously a big shortage of properties, and the number of properties of rent have fallen to basically all-time lows. So equally, price and cost of rent has gone up. So Sydney combined rents have risen by 17.5% over the past 12 months. Brisbane's up 18.6% over the same period. Melbourne's up 14%. So the average city rents in Australia are now $654 a week for houses and $473 for units. So it's pretty huge.
Now, this is pretty much a knock-on effect because I guess as mortgage rates continue to increase, that's having a knock-on effect to landlords who now have higher commitments ongoing, which are then passing it on to their tenants. So I guess with rates rising, we're still yet to see another 4 rate rises are predicted for the rest of the year, another 2 early next year. This is something that could potentially get worse.
Yeah, basically it's a supply and demand issue because as we've sort of talked about before, the building industry is basically broken at the moment. There's been a string of high-profile builders that have actually gone broke. If you've been trying to build a house, we've had stories, Nathan spoke about in previous videos where we've had clients who've started a build 12 months ago. Builders come back and said, I need you to pay another $60,000 for variations that we just hadn't accounted for. The cost of steel, timber, everything's going up. And I think what's kind of even compounded that is because there's not more houses being built, and with some natural disasters, there's been sort of houses that have sort of taken off the market. Families growing, people need a place to live. There's people potentially moving back from overseas. It's caused the vacancy rates and the listings to drop. So as you can see here in Brisbane, starting off with the vacancy rate, like in 2016, obviously way before COVID, was up to sort of 4%. There was lots of properties. Now it's below 0.7%. That's the lowest, for a very long time. Sydney, it's a similar case. During COVID, actually vacancy rates went up because international borders were closed. People weren't sort of coming in and they were leaving Sydney and moving out to the regions. I think now with a lot of sort of the work from home, I guess going back to normality and people having to return to the office, also seeing vacancy rates drop there. And it's a similar case in Melbourne where, post-COVID, things have sort of gone back to normal. So it is causing a lot of issues, and even in some areas, they're saying in Queensland and specifically the Gold Coast, it's actually more expensive to rent a house on the Gold Coast than it is in Sydney. So the median asking rent for a house on the Gold Coast jumped to $754 a week compared to $663 in Sydney. It's wild.
Now, the thing I saw even with our sister in the Gold Coast was even as you're looking to rent, you can't get a spot. Like there's 10, 20 people. We had a mate here in Brisbane trying to get a property here to rent, and he couldn't actually get somewhere. It took him like 6 months to find the right property just because there was that much demand, and anyone sort of applying for it was competing with other people. He ended up securing a property by putting $50 more a week in terms of what was the advertised rent just to secure it. So it is pretty challenging out there for those trying to get in the rental market for sure.
Yeah, and the demand, there's different markets. So I guess if you are looking at renting, it's worth kind of considering if you're looking in some of these areas with some of the tighter vacancy rates. Some of those tools from SQM data can be helpful. I guess you can tell by using realestate.com.au as well, seeing that there's not many listings. But when the vacancy rates are, that sort of low, under 1% at all-time lows, in some areas in the Sunshine Coast and Maleny, rental has actually gone up 55.2%. Some massive changes. Similar thing on the Gold Coast, Broad Beach, rental costs are up sort of 40%. So, if you're in those areas and you're trying to rent, you might use, similar technique we've spoken about when you're buying a home. It's kind of the next suburb along. There was a really interesting article, by Michael Matuzik Missive, where people, and there's been lots of claims about mortgage stress and there's sort of mortgage stress, there's a talk of. Interestingly, based on some of the data that Michael Matuzik's kind of looked at and analysed, the proportion of renters in sort of, the amount of their income that used towards housing is actually higher. So with housing costs as a percentage of gross household income in the renter column, there's sort of, people that are using more than sort of 25%, there's 12% here, 30 to 50%, there's 21%, and more than 50%, there's 10% of renters actually using more than 50% of their income to pay for rent. Whereas interestingly, for mortgage holders, where there's all this sort of blow up in the media about mortgage stress and all that sort of stuff, over 74% of mortgage owners are using 25% or less of their income. So I guess it's kind of contradictory to some of the rhetoric that's going out there that's saying, there's lots of mortgage stress, there's going to be a complete market crash. In fact, sort of based on this data, if you're focusing solely on income, and as we've sort of covered in other videos, the property market is very complicated and it's not worth sort of just focusing on the one thing. But it's interesting that potentially that rental crisis is going to get compounded by some of these issues where rental, like Nathan said earlier, the cost for landlords is going to go up, interest rates going to go up. Like, what are you sort of seeing, Nathan, I guess, as far as clients and that sort of stuff?
Definitely. Look, I think it's a number of different factors, as you said before. I know when COVID first hit, a lot of investors stopped actually wanting to buy property. So what that means is there's less supply because you've got less investors out there. We saw a huge spike in demand in owner-occupier activity. So more people have bought properties, less supply for tenancies out there. And the second thing also is, as we found with less interstate migration, with borders closed, less international migration, there was less people out there looking to buy or purchase investment properties, once again, less supply. And I think it's really been a knock-on effect with rate rises. There's been a squeeze on landlords and their ongoing repayments. They're passing that on now. So I think it's a very complicated topic here. But I think simple supply and demand is certainly one thing that we're starting to see is tightening.
We are actually seeing there's been a bit of a pipeline of sort of off-the-plan properties. So a couple of units that are around sort of like Chermside a lot, which in Brisbane specifically, areas that are starting to get finished. A lot of those projects have been delayed by years potentially. So I guess the good news is there's like a little bit of supply happening out there, but definitely not that's needed. And even in the Queensland government's budget, they've tried to address some affordable housing and try and put more, I guess, homes out there for people to live in, but it's still not helping. And interestingly, even the Brisbane government has, to combat where people have sort of been putting, houses for short-term rental, renting out rooms, they've introduced a new rates, council rates for Airbnb hosts. So they've said, Brisbane homeowners who list their home property as a short-term accommodation on Airbnb will be slugged with a 50% rate hike amid shortage of rental properties. Basically it's saying a 50% rental rate increase would mean about $600 extra on there. So one solution, I guess.
Yeah, and I think Airbnbs are once again something that is quite challenging because I know, Jaden, we had a client recently, they had the option of renting their property out long term where they get, $600-700 a week, or put on Airbnb and they were getting like 2-3 times the return. So that is another big issue in itself, that the possibility of a short-term accommodation versus a long-term lease actually gives a landlord less motivation to let it out long term.
And you can kind of see why some of those areas I listed before were all coastal, Gold Coast, Sunshine Coast, etc., because they're in locations where interstate people are going to holiday. And to Nathan's point, why would you rent out a unit that you've got, say, in Broadbeach where you get $400 a week if it's long-term rental, or you get $400 a night potentially with Airbnb during peak periods? So yeah, it's a pretty tricky thing. Looks like it's not going to sort itself out quickly.
So Jaden, I guess this brings us to a point, where is it actually cheaper to buy a property rather than to rent? Do you have those areas?
Yeah, so even with rate rises, there are still areas that it is sort of cheaper to buy than rent. So this is a pretty cool tool to use. So it's on realestate.com.au. We'll include it in the notes before. You can sort of filter by location as well. So you can look in Abbotsford and different areas if it's cheaper to buy and rent. And you can go by city. So in Sydney, it's actually cheaper if you're looking in Spencer, Bar Point, Nanai, like obviously places that are probably a bit outside of town, but still nevertheless potentially cheaper to buy than rent. In Brisbane, sort of probably looking around more the Ipswich areas like Laidley, Esk is obviously quite a way away, Lockyer Waters, etc. There's a couple of areas where it's pretty interesting that you can still do that. So I guess check this out because it's going to have a lot of good info in there to think about. And the positive thing is potentially if you are, sort of on the fence about buying and getting to the market and you're worried about maybe property prices dropping or things changing, you could sort of position it this way and think, well, at least you've got some stability there. Because I know one issue, and one thing I think needs to be addressed in sort of public housing and even rental housing is just sort of housing instability. So I know even with friends of mine that have sort of rented, when you're only getting a 6-month lease and you've got a family, like that's not enough time to kind of get comfortable and feel like, well, I don't really have to move homes again. So potentially even with landlords, like it's something that needs to be thought about, and even potentially legislators, like why can't we have 2, 3, 4 year leases in place? Why is 6 and 12 months kind of the normal thing?
Definitely. I think there's a lot to be thought about here. Look, as always, here at Hunter Galloway, we're mortgage brokers. We're based in Brisbane. We deal with people Australia-wide. So if you're living in Australia and needing help with a home loan, we can help. If you're refinancing, wanting to buy your first home, or even buy an investment property, call us on 1300 088 065 or visit us at huntergalloway.com.au, and we'll see you next time.